Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. He's joining us virtually. He's Victor Chiazor, the Head Research Investment FSL Securities Limited. Mr. Chiazor, welcome to the program.
Good morning, Nancy. Thank you for having me.
Good morning. Yes, I can hear you. Can you hear me?
Yes, loud and clear.
Okay, welcome to the program. I'm not asking you any FCC question. We are talking about we're talking about the markets today. I will get started by, in fact, asking you what in the world are investors thinking about right now? What in the world are investors thinking about amid the potpourri of many pieces of information that is going up and down?
Sorry, can you take that again?
Okay. I am asking you what in the world are investors thinking about at this time with so many, information going up and down around the markets, even around the economy. What are investors thinking about right now?
Well, for any investor, what will be in the mind of the investor will be how to maximize return on their portfolio and their entire holding. The idea would be looking at all the headwinds available in the macro space. The investor's target will be to get the best out of the portfolio they manage, looking at inflation, looking at devaluation. How best do you play around those funds to maximize returns on those investments? And at the end of the year, you are able to smile to the bank because the truth is that with most of the headwinds around, if you're not a smart investor, if you're not an informed investor, you might find out that at the end of the financial year, your asset under management might not have done as well as you would have hoped because of all the negative factors affecting the market, especially looking at the swings in the equity space, looking at the yield environment, looking at the inflation rate, looking at the negative real return in the market. So all of these would be what the investor will be looking at to actually maximize returns on any investment.
What specific macros are influencing the market right now? You talked about inflation and some others, but what specific macros? Are there specific macros that are influencing the market as against others?
Yeah, for different aspects of the market, there are major indicators that actually affect it. Looking at the equities market, we're looking at inflation, which definitely affects activity in the market. We're also looking at the yield environment, which also affects activities in the market. We're also looking at the response of the CBN monetary policy to all of this, and how they respond will determine what happens within the investment space. So for the equities market, we all know how the equities markets react in a high yield environment. They don't tend to do well around the high yield environment. If you look at the last 9 years, you'll see that the equities market returned the best in 2020, where the yield environment was about 3.5%, as against the other years. So for the equities markets, they tend to do well when the yield environment is low, and for the fixed income market, once you see the benchmark interest rate move up, you tend to see the yield environment go up. That's where you begin to see a lot of activity around that space. So the major play is around inflation, around MPR, and around the yield environment. That determines how market plays. Also, you also look at the exchange rates, which also has a huge effect on the foreign portfolio inflows and how it affects both the equity and the fixed income market.
Okay, for the last 2 months, it's not even up to 2 months, at least from the February meeting to the March meeting, the MPC meetings, we saw a sizable 600 basis point hike for interest rates. You glossed over it a bit. I would like us to go back to it to see how that sizable interest rate hike has impacted the market so far, at least in the last 3 weeks or so since the last meeting. We saw Cardoso at the IMF World Bank meeting. Of course, when he was speaking with Dr. Selassie, the IMF head of the African department, he did say that they needed to go very tough on interest rate. How has this really impacted the market? And are these sectors of the market that this sizable 600 basis point have really impacted than the others? I hope you understand my question.
Yes, I do.
Yeah.
The reality is, what we've seen in the market is that investors are really not really focused on the negative return that is currently being offered by the market, because we have inflation currently at 33.2%,
yeah.
and inflation for February was around 31.7%. Currently, the yield environment for Treasury bill, last stock rate was around 21.12. So effectively, you have a negative return of over 10%. Let me take you back a bit. In 2023, this time 2023, the first quarter, end of the first quarter, we saw Treasury bill rates at around 14%, and we had Treasury around 14%, and we had inflation at around 21.9%. So effectively, the negative return on any investment then was around 7%. So if you're looking at 2023 and 2024, you find out that the negative return is higher now than what it was in 2023. But yet, you find out that the appetite for government securities has increased. If you also want to look
Okay, the network seems to be misbehaving. Can you hear me, Mr. Chiazor? I can hear you, but it's a bit wobbly. Okay, should we take a break and try to reconnect? Let's take a break, guys, and when we come back, we'll try to reconnect Victor Chiazor. I can still hear him speaking, but it's a bit wobbly. Okay. Okay, now I can hear you. Okay.
Hello, am I audible?
Yes, you are now. Please go ahead.
Okay, so I was trying to speak to how the investors are actually reacting to the high yield environment, not necessarily minding the negative return. And like I said, in the offer at the Treasury bill market for last year, we saw an offer of about 139, subscription of 165 billion, an allotment of about 142 billion, and the stock rate was about 14.7. You saw that the appetite there wasn't much because the subscription was about 165 billion. But fast forward to March 2024, we saw an offer of 162 billion, but subscription level about 2.4 trillion, and an allotment of about 1.1 trillion. It showed you that the market is actually more interested in the absolute numbers in terms of the interest rate being offered, not necessarily the negative return, because currently the negative return is actually wider now than what we saw in 2023. But fast forward to what we've seen with regards to the monetary policy, pushing benchmark monetary policy rates by about 600 basis points. We've seen a negative reaction with regards to market activities, because having seen most of the full year numbers for most of the players in the equities market, and most of them having marked down for full year dividend, we've seen most of the investors begin to move funds from the equity space to the fixed income market, where they can get yields of over 20%. Because the truth is that where you can get a yield of over 21%, as against where you're getting dividend yield of between 7 and 12%, the incentive to stay in the equities market will not be there compared to what we saw in 2023, where more investors were more tilted towards the equities market. So for us, the increased monetary policy rates and the increased yield environment seems to be slowing down activities in the equities market, and it may continue if things don't reverse in the near term.
When do you think that perhaps there could be some kind of equilibrium? Because now, for the MPC, President Tinubu thought it wise, and I think it was also a smart move, thought it wise to bring in the DG of the Securities and Exchange Commission to be part of the MPC. I don't think we've ever had that. The ex-wild DG, the former DG that was just removed a few days ago, Lamido Yuguda, I've seen him attend the MPC twice, at least since this year, hoping that, of course, Mr. Gama, who is the new DG now, would also resume at the next MPC meeting next month. So when do you see that equilibrium? Because if Olayemi Cardoso and his friends, his former DG, his colleagues, are also having that meeting, there's a permanent secretary. There's a permanent secretary in the finance ministry as a member of the MPC, as well as SEC as a member. How do you think that they can actually balance that relationship? Because I wonder what will be going on in that room if Cardoso says and his team says, I want to increase interest rate. The DG of SEC should be able to also say, guys, I know the quagmire we are in, but it also affects the space.
Well, I get your point,
Yeah.
because the truth is that there needs to be some form of collaboration between both the fiscal authorities, monetary authorities.
This network is failing at this point. I guess let's take a break, guys. Let's take a break to reconnect with Mr. Victor Chiazor, and we'll be right back. Victor Chiazor, the head research and investment, FSL Securities Limited, is still with me. Sorry, Mr. Chiazor, the network has been a bit wobbly. Can you hear me now?
I can hear you. Can you hear me?
Yes, I can hear you now. Okay, so just go ahead. I assume you heard my question earlier and you were making the point.
Hello?
Yes, Mr. Chiazor, can you hear me now? Can you hear me? Okay.
Hello, Nancy.
Yes,
can you hear me?
Yes, I can hear you. I can hear you. Can you hear me? I'm nodding in affirmation that I can hear you.
Okay, I can hear you now.
Okay, good. So just land on your point.
Okay, so there needs to be this handshake, and just like you've seen in the past, we didn't see that relationship between the fiscal space and the monetary space before the current CBN governor and the new head of the finance came on board, Mr. Wale Edun and Mr. Cardoso. Now we're seeing some form of handshake between the two ministries compared to what we saw before. So right now, we need to see that relationship between CBN and the fiscal authorities, because the idea would be we need to know when to stop the tightening and begin to loosen, because if we continue to tighten longer than necessary, it becomes counterproductive for the economy. Then we begin to see GDP growth begin to slow down. We begin to see lending to the real sector slow down, and that actually hurts the economy. And also we begin to see lesser activities around the equity space. So there needs to be this relationship that maintains a hawkish stance, but also know when to ease on the tightening.
Mm. You talked about earnings a moment ago. While you were speaking, you talked a bit of earnings, talked about earnings in surface. Now, let's take a look at some of the earnings that we've been seeing, and I hope my team can actually put the graphics on the screen. Of course, we've seen, when I was taking a look at that, okay, you can see from, I can't see from here though, but what I see is Unilever and all of that. I think there should be Transcore there. Which categories of companies impressed investors the most for full year 2023, and perhaps we are also seeing some audited Q1 2024 earnings coming through?
Yeah, I think the banks, I would say, impressed investors the most.
The banks are always
on the back of-
impressing.
Yeah, so the banks majorly for this year was likely due to the revaluation gains, which actually boosted most of their performance, as against other sectors that actually struggled with regards to high energy costs, high power, high cost of sales, and a significant jump in FX losses for those exposed to FX inflows. So we saw a bit of a segmentation where the banks benefited from the depreciation of the naira, while we saw most around the consumer goods space and some manufacturing, the manufacturing sector suffer from the loss in the naira. So it was a mixed bag. So I think for this period, the banks actually impressed the investors the most, though we didn't see that transition into improved or higher dividend payout on the back of the CBN stance that dividends shouldn't be paid from FX gains. So that sent a mixed feelings, some kind of mixed feelings to the market.
Just as our viewers are seeing on the screen right there, in fact, when I was reading the earnings of some of these banks, I also realized that I think Zenith Bank, Access Holdings, GTCO, I think either 4 or 5 banks actually made 2.4 trillion naira in profit after tax for full year 2023. And you're actually right, because of the currency gains that they've gotten, as against 700 and I think 710 or 15 billion naira that was profit after tax of these banks in 2022. How do you think that the recap story of banks will really, how are investors taking it? And with the earnings, because in fact, when the Central Bank of Nigeria came up with the guidelines for the recap for them, that would be from now to 2026, a lot of people were saying, yes, these banks have money. Let them go and recapitalize. They don't think it will be so much of an issue for them. What do you think? Victor, can you hear me? Wow, I think we're having, this network is really not friendly this morning. Victor, are you there? Can you still hear me? Okay, I guess the picture is frozen. Let's reconnect again and we'll be right back.
We can do it. We can build our country for the sake of the millions of the people. Delivery, yes, we must achieve it.
It could seem impossible because you don't dream big. When you have this mentality of an achiever, nothing is impossible.
So don't take on too much commercial or private debt so you can service. Any country, if you can service, if you're generating enough revenue from investing that money, fine. But if you're not, you have to be extremely careful because debt relief is not easy.
Hard decisions have been taken and they are required to help us because the central bank can't do it on its own. It has to work very closely with the fiscal side. One without the other is like, that famous adage of clapping with one hand. It won't go anywhere.
The last thing central banks want is the financial system, the tail of the dog, to start wagging the body of the dog, which is the economy itself. They don't want a feedback loop from bad finance to bad economics.
This is Moneyline with Nancy, and I am Nancy Nnaji, where I consistently give you a dose of finance, economy, markets, as well as investment information. All right, Victor Chiazor is still with me of FSL Securities Limited. Sorry, Victor, can you hear me now? I don't know why this network is misbehaving this morning. And it's not raining here. You know, you would have just like easily blamed the rains. But can you hear me now?
Yes, I can hear you.
Or is it raining in Lagos? I heard it rained.
No.
Was it yesterday?
Yeah, it rained yesterday.
Okay. Yeah.
Yes, it rained yesterday.
Okay. So go ahead, please.
So can you land on your point?
Yes, I actually asked about the earnings of banks and how the recapitalization process, I guess all the banks are thinking about that now. They are putting their strategies in place right now to be able to recap from now till 2026. How these earnings, how investors will be seeing these earnings as an indicator of the bank's recapitalization. That's one. Then the other part of the question is, what kind of evangelism is going on right now to investors, as in their readiness for the bank's recapitalization and the impact on the market?
Okay, so this recapitalization is for a while now. So it's not coming as a surprise to the market, though most people didn't expect the amount being projected. But however, I think the CBN has also given most of these banks a lifeline because we're not going to see most of the banks disappear, just like we saw in 2005, because they're giving you options to either raise capital or downgrade from an international bank, national, or from a national bank to a regional bank. So those options are there, and I can tell you that for banks that will not be able to meet this recapitalization, especially for the tier 1 and tier 2 banks, the option there would either be to either just downgrade from an international bank to a national bank. So the options are there. Where we may see a lot of activities may be around smaller banks, regional banks, the likes of Providence Bank, and other banks that may not also be listed on the Nigerian Stock Exchange. We may see quite some level of mergers and acquisitions and a lot of activities to meet this recapitalization. However, with regards to the market, we're seeing some form of negative sentiments coming into play, because the reality is that most of these banks would actually need to issue more shares and actually dilute their current holdings. So investors are not taking that dilution as we expect in a positive way, because they feel that what it means is and share issue would increase, meaning that the profit being touted by the banks will now be shared amongst a larger pool of investors. So for any investor, they want to actually wait and see how all of this play, and besides, the banks also notify the market as to how they plan to raise these funds. GTB notified the market that they're increasing their issued share capital from about 14 billion to 22 billion. While we've seen Zenith notify the market that are looking to increase from 15.9 to 31, meaning their shares in issue would most likely increase to about 62 from 31. So if they go by the way of 1-for-1, we can see the likes of First Bank issuing shares outstanding jumping from about 32 billion to about 62, meaning that existing shareholders will be diluted. For you not to be diluted, it means that the banks will need to double their profits. And what exactly is it really possible to see the banks double profits in the current financial year, between this year and between 2024 and 2025, before the deadline of this recapitalization? It may not be that really taking this positively. As we can see, the banking sector is down year to date by about 12%, showing you that the market and investors are not really accepting the current position of the possible dilution of their earnings.
Okay, let's talk about the SEC leadership. This new sheriff in town that has been appointed by President Tinubu. How do you think that might change the dynamics in terms of regulation? Or do you think, of course, there's the stock exchange, that's the NGX. The NGX is a group now. head by Temi Popola. Of course, there are CEOs of other bodies there. But with SEC being the apex regulating body of the market, and I know that there is a master plan that the Securities and Exchange Commission has been working on since the days of Aruma Ote. What do you see changing as market watchers, as market players? Is there anything that the new SEC leadership needs to take on board? Because they might likely be watching. I know they are watching, actually, so they could.
What we believe is that we hope to see speed to market, because what we've seen most of the times is that most of the offers that most of the capital market operators have taken to the regulators seem to have slowed down. So we would hope to see speed to market, because with activities around recapitalization, we expect to see higher activities and higher engagement with the Securities and Exchange Commission, and they need to be on top of all of these activities. Else, we may see a slowdown of events. So for me, what we would expect to see with the new leadership of the Securities and Exchange Commission would be speed to markets. As the transactions come to SEC, we need to get speedy response. Where there will be deficiencies, let the deficiencies go out fast and quickly, so that the issuer and the other parties can actually respond, and all of these offers can actually hit the market timely, and the market can also respond, because we all know that it seems like a long time, 2026, but before you know, for the snap of a finger, you're going to be there, and you see most of the banks and other players are looking to come to the market, begin to scamper to meet these deadlines. So I think speed would be what I would want to advise SEC to actually bring on board.
I think that's a good one, because really there is really no time. And for me to even the new leadership of SEC, talking about, I know there are guidelines concerning crypto assets. They need to be a bit more, open as to that, and also investor education, because you still see a lot of unclaimed dividends. You still see a lot of the financial literacy is low. So that is from me to the SEC. The new SEC DG. All right, let's use the next few minutes to talk about what are the key considerations for investors right now, talking about investment strategies. In developing their investment strategies, what should people look out for people that really want to invest? Of course, there's still a negative real return now, I think at about 8.4% or so. But what considerations should one be making when developing strategies for investment?
Well, you have to maximize return on any investment you're holding. And the reality is that currently there's no asset class within the Nigeria financial space that gives you a return on investment that beats inflation. Not to talk of the activities around loss in the value of the naira. So the idea would be to look for instruments and the combination of asset classes that actually gets you closer to reducing your negative return to almost zero, or probably even beating both inflation and devaluation. So for me, I think investors should be looking at a combination of both the fixed income space and the equities market. If you recall, last year we saw most of the companies listed on the Nigerian Stock Exchange do over 100% return in terms of capital appreciation. We're not talking about dividend play. The likes of UBA, the likes of Fidelity Bank, they all did over 100%. So you are invested January 2023 and you sold your investment, you exited your positions as of December 2023. You would have beat both the loss in the naira and you are also beating inflation. So you have to have a mixed bag, and you're looking at both activities, investing in blue chip companies within the equities market, and also having some level of both money market instruments and fixed income instruments in your portfolio. Having a mix of all of this gives you some edge around beating both inflation and the devaluation play. So I think investors will be looking at maximizing their portfolio around those asset classes.
Okay, so in short, diversification,
Exactly.
so that you can mitigate your risk as you hedge against short-term gains as well as long-term investment goals. Thank you very much, Victor, for being on the show today, and have a lovely day.
Thank you for having me.
All right, I've been speaking with Victor Chiazor, who is the head research and investment at FSL Securities Limited. That's the much we can take on today's edition of the program. Thank you all for your company. Please join me again tomorrow, same time on this channel. Another guest, another topic, or different guest, different topic. You don't want to miss tomorrow also. Be the best you can be the change that you want to see. I am Nancy Najibai now. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content. Bye.